All right, let's review today's trades. I'll start off by talking about the daily chart. Once again, we had another bullish body, and we managed to close just barely above the Friday's close. So we have that is technically still another bull day. We are just barely by like a point. We're better than Friday's close, so that is another bullish day. We started off with a big gap down, and at the point when we opened, I was surprised that we ended up having such a strong rally through here. But it did not surprise me after we got the first two bars. So whenever you have a big gap down like this, something I found is that it often turns out to be a pretty decent swing trade by buying above that second bar. So first bull bar, then you get a follow through bull bar, and they're not taking up too much of the room of the gap, right? You still have about 75% of the gap left. Then reasonable place to buy is to buy above that, and you try to go for pretty large swing trades. So you put your stop below, then at a minimum go for 2 times your risk. At a minimum, try to get back up to the close of yesterday. And it always follows this really interesting pattern, and I've just picked this up over the years. So if you buy here, often at some point during this rally, it'll have some sort of bear attempt to go lower, and that really is a big, it's a big fake out. Okay, and this is something you see a lot on this specific pattern. And the fake out here occurred around the moving average. So really tight rally up after you've had 8 consecutive bull bars like this, and then a little pullback, then another bull bar with another and with a new high. You're probably going to have buyers during this first pullback. Okay, and so the fake out that occurs, it's occurring here and here. So at this point, when the market was on its low and this was a big bear bar, it looked like it was going to end up trying to reverse what happened here. But so often that's not the case. So here was your fake out, then a second attempt to go lower, that failed, and then we ended up going higher. So, and that's such a common outcome once I see 2 bull bars like this. Then we got follow through, and then so I do not trust these first pullbacks like this. If it keeps going down, then something different is going on. But it's a really common pattern that I've kind of discovered here. 2 bull bars after big gap down, rallies up to the moving average, then it kind of tries to make it look like the market's in reverse, and it doesn't, and then it just either continues up, slightly up like this for the next few hours, and kind of just hangs out around the close, or it it'll break up a little bit higher. In this case, it'll go up a little bit higher. So you know, you're not going to catch this every time, but this specific trade I really like, and I've just seen it so many times. I kind of discovered it years ago, and something I kind of see play over and over again. Especially, it's good to be trying to buy in this scenario when you've had the daily chart be so bullish like this. And so if we're having these bull days where it's mostly bodies through here, and that means that during the day trading hours, the market is going up. So if we have a chance to buy early in the day, well, there's a good chance we're going to be able to buy with the market continuing up for the rest of the day. So it's good to try to buy early in this scenario. So, I mean, other buys I can mark during this, you could buy after this third bar, or buy, then you get this little inside bar here, that's another buy, or buying here. Those are all good buys to take. Now, do you take all of them? No. I mean, unless you're trading really small and you just want to add on to your position as it goes up, which would be an interesting way to do it. Really, when I'm pointing these out, I'm just saying any of these are good to take by themselves. And then all of these are continuing to express that the market is still going up, so these are reasonable buys. Now, what I was talking about, like, you'll usually have these fake outs and the market goes higher. So where to buy after it looks like the market might be going higher. This might be a little early, but it's buying here. So at this point we've had a double bottom. And when I'm looking at this, so let's just pull it over to the side like this. So when you look at this, you say yes, it's a bull bar above the moving average, but it might be a little bit early. We're still get all these sideways bars here. We might get another test lower before it goes higher. That's the case. So either wait or trade smaller and try to go for a swing trade. You know, try to get out at least around this close or beyond that. Another trade is this bar here. Now you've had this double bottom, and you've had a higher low double bottom here with this attempt to go lower than this attempt. You can also look at it just on the bare bodies. So double bottom, market moved higher, then a little pullback, then a second leg down, and now you're getting a bull bar. And even though in this case we have a big tail on top, that's not too much of an issue in this case. It's still closing above the moving average. The tail is not all that big. We're still closing above the midpoint, so it's got good context. The signal bar is not too bad, so I like that for a buy. And really, I think any of these bull bars are okay to buy for a swing trade. And I think for the next things that I'll mark, I'm going to mark them for. So really, any of these are okay. You can buy above it and go for swing trade, go for more than 2 times your risk. The next things I'll mark is just when I would be scalping. So when I'm trying to go for like a 5-point scalp. First one I would do a scalp on is here. Now I remember when I was thinking about this bar, I was thinking, should I buy here? I kind of like the context where we've had such a bullish open, and then we had these failed attempts to go lower. Now we're kind of in this channel that's trying to break out above whatever resistance level was through here. And so I'd be buying right there. I was thinking, we're basically, generally I don't like buying above a bull bar that follows a bear bar. Right? I'd rather see consecutive bull bars and buy above that. In this case, I still think it's okay to buy above, even though you don't have the best kind of setup. Another thing to point out is you have a ledge here. And I define a ledge as being multiple tests of the same level on consecutive bars. So this bull bar went down here, and the bear bar tests that same exact tick, and then once again we came down and tested the same tick here. So we have, this is more like a triple bottom, so 1, 2, 3 of that same level. Now we're getting this good looking bull bar looking like it wants to break out above and go higher. So I like buying there for a scalp. What about buying here? Well, I said I was only going to mark the scalps, and this is close. I think it's okay to buy for a swing trade. My concern is this is starting to look like a bit of a triangle on these this pullback right here. You can see kind of has the triangle shape, and when there's a triangle, this might be a final flag. So we have this breakout, then we get a final flag. That means you get one more breakout that ends up failing and reversing back. That could be a case. Also, just with the triangle, anytime you have a triangle, usually the first breakout fails, then comes back and tests the apex of the triangle. So this also might be that case. And we're also coming right up to the yesterday's close. So we're at an area that might be more of a target instead of a place to continue buying. So that's why I'd probably avoid buying there. If I'm doing anything, I will be buying. So, you know, if you ask, well, if I'm forced into it, would I rather short above here or buy? I'd rather buy. So I still lean bullish on that, but like I said, we're kind of coming up to different levels of resistance. It's possibly a failed breakout. So I'd rather just avoid taking that. Something I drew in at this point And you might have already seen it on the chart. It's a measured move off of a gap. So we got this big bull rally, then we get a body gap that occurs right here. So the high of this bar, the market breaks out, and then this pullback doesn't come back and test this close. So all through this area here, there's a body gap. So body gap, then I drew the measured move from the open of the day to this gap area, and then that puts the measured move up here. So if I was to buy here, then I would like to try to set a profit target somewhere far above. And this would be optimistic, but you can look on the prior day that your gap happened here, and you were able to get quite a bit more out of the day. So if you're setting, when you're trying to figure out where the market's going to go, well, if you have a big gap like this and a measured move that puts you higher, then that's going to be a target. I mean, the computer's going to look at that, the trader's going to see that, and if the market can continue to go up, then that's going to be a place where they're going to buy the market up too. So like if the market had gone above this bull bar here, might have been able to find some buyers there, but they were able to avoid that. They were able to keep the market from going above there. So there probably were some buy orders, but they were able to hold the market down. And this might be a little bit of an aggressive sell. I'm still going to mark it that's selling there after this double top. So what I'm thinking about selling here, I'm looking at, we've had a first leg here, pullback, and the pullback really is just it going sideways for an hour, and this is the second leg. So first leg, pullback, second leg, and we've got a bit far from the moving average. You look at these 5 bull bars, they're pretty strong. That could lead to more up. However, we're late in a trend at this point. We've been trending up the whole day, and whenever you get a strong move late in a trend, there's an increased chance that it's actually going to end up as the final leg instead of being the start of a new trend. Another thing I talk about a lot is an S move, and an S move kind of looks like an S. So it starts with the breakout, and then you kind of channel slightly up, and then you break out above that channel strongly, but then that breakout up just ends up being the last move, and the market reverses down from there. So I don't bet on that happening until I see some kind of pattern set up, but then here's that pattern. So either of these sells here, because here's that first double top. Actually it's a double top, then bear bar, and you can see it never went above that, so you would have been able to stay in the trade. You would have stayed short if you sold there. And then really a triple top here, room to move an average, so these are also, so both of these are reasonable scalps. Might be a bit aggressive because this was so strong, but like I said, this could be a larger reversal pattern, and at the minimum, bulls might want to let the market come back to the moving average. Market gets below the moving average, we test this area of support and resistance from earlier where this body gap formed. Market goes up, tries to get above the moving average once, tries a second time, and now we're getting a bear bar closing below the moving average. I wouldn't sell below this first bear bar, but when I see the second bear bar, that's when I begin to sell. If the day had been more bearish, so let's say the day had been a bear trend instead, and then now we're coming up to the moving average. Now we're double topping at the moving average. I would be okay with shorting below the first one here. But since the day has been so bullish, this itself might just be a bear trap, and then we might break up higher. So that's why I want to wait for the second bear bar here, so that the odds are higher. And you could have easily gotten your 5 points of a scalp right there. And at that point, that's all that the day had left. You kind of got too late in the day to try to do anything else. So on the open, anytime I see this exact pattern where there's a big gap down and then you get 2 strong bull bars, then I like to buy above that and try to get a swing trade out of it. And I'll usually try to buy these little little pullbacks here because I know how often they fail, how often these are just traps. So I'm buying here, and usually I'm pretty eager to hold through these pullbacks or even buy because I know that they are just traps. Sometimes they'll go a lot farther down, like to the midpoint of the rally or even down here. But like I said, these are just, it's just the computers or the funds or whatever their strategy is for the day. It's they want to buy, but they need to get everyone else out of the long. So they trick them out by moving the market lower, and then they're able to send it higher after that, after they've secured their long positions. So something else I want to point out is that the average true range over the last few days, last few weeks, it's been much lower and much more normal. It's been much more like how it normally is, and it's been away from this these like really huge volatility days. So this is abnormal, and you can see over the last couple of weeks we've been getting back to normalcy as far as the range of the days and as far as the size of the bars. Like during here, pretty much ever since 10:30, the bars are getting back to their normal size of 5 points to 7 points. Like this is somewhat of an average bar here, and that's this is a 6-point bar. So we're kind of getting bars at around 4 points to 6 points, 7 points. So well, I'm bringing this up because this is a switch from the market that we have been in. So if you have been having success during all of this craziness, then you need to recognize that the market's doing something different now. And what was working here most likely is not going to be working here. Okay, so if you were making money like during January here on these days, or back in November or October, that type of trading is going to be what will make you money during this. So we had this more normal type of trading, then we had all this presidential news and tariff news. Now we're getting back into the more normal area. All the shocks from the start of the new presidency and the tariff news and all the sudden economic news that came out in the last couple months, that's all changing. The market is normalizing again. So that's, in one way, it's a case for optimism for you guys, because I know some people struggled during here, and now the market's doing something different. So the strategies you want to employ, they might be working in this environment. And two, for people that were doing well, you need to make adjustments. You need to probably change what you're doing, because if you're making money during this, you're not going to be making money during this. It's a different theme. The market has a different personality now, and this is so often what you see in trading is that people can make money for a week or 2 months, and they're saying, yes, I finally got it. I've finally done it. I'm finally making money. I'm profitable. And then they scale up. They increase their size. They're making money. Why not? And then the market changes what it's doing. The same kind of setups aren't working anymore. But they haven't been through the cycles enough to realize this. So they don't recognize that they need to make their changes and adjustments. Then they just end up getting killed, and they give everything back during that time frame where the market's doing something different. So be aware of these changes that happen in the market, and a big way to do that, one really important thing is just what's the average true range of the day or of the 5-minute bars. Are the 5-minute bars more normal like this and they're around 5 points tall, or is it a different environment where they're like 15 points large? Like that will be different and require different setups. That's all I have for today. Let me know if you have any questions, and see you guys next time.